Hello, my YouTube friends, and happy Saturday. I hope you're all doing well. My name is Adam Kahn, and this is Investing with Adam K. I'm going to start out with a quote from one of my favorite TV characters, Montgomery Burns, which is, "I give it all away for a little bit more." I love The Simpsons. I don't know if you guys too. I used to watch it all the time when it was on TV, and when we had just normal TV with like, I don't know, 8 channels. Actually, I was probably watching it still when we had cable. Anyway, it was a great week this week. Wednesday had an amazing type of reversal day for those of you who are technicians. Um, I love that I've switched to these once a week videos. Not, I mean, I miss doing the other ones, but I find that I have so much that I want to talk about when I start doing these videos that my brain's like spinning with all the information I want to get out. Whereas before, I was worried that I'd be just repetitive day in and day out and that you guys would get bored with it. Now, maybe you still do. I hope not. But anyway, stick around. It should be a great video. Like I said, I have a ton of things I want to get into. This week was a really interesting week on a lot of levels. And I'm going to talk about the stock market. I'm going to talk about real estate a bit. We're going to talk about those gloom and doomers like we do often. And we're going to get into some pretty interesting things. So I'm going to start a little bit with one thing to really look out on because I watch a lot of YouTubers and some of these pop up on my screen, and there's some people out there that I think give terrible information, maybe myself included. So really, as always, you guys need to do your own research when making financial decisions. I'm just giving the advice that works for me and sharing it with it. So please just think of it as entertainment value. But I'm listening to one guy who, and I'm not going to call him out, but if you guys know him, please, feel free to say something. I'd have the conversation with him. I just don't know how much research he does. He advises in putting a large percentage of one's portfolio into Cornerstone. The ticker symbol is CLM because they pay an 18% dividend, and you can margin your account against it on a pretty high level. So if you negotiate your interest rates with somewhere like E-Trade and you get it down to, I think even my margin rates are like 6 or 6.99 or something like that. And then if you're getting an 18% return, you use that to pay off the lower interest rate. This all sounds great. It really does. But the problem is there's so much risk going on there that isn't explained that I don't know if he understands it. I don't know if he's looked into what a cornerstone is, what they're investing in, and how it actually works to pay out that dividend. And to explain it a little bit, they're a closed end fund. They have stock that trades on the stock exchange. What that does for them is they don't have continual money flows coming in where they have to make changes in the portfolio. But I'm going to read through, I looked up their top 10 holdings and what essentially they're doing in order to be paying out that 10% dividend. So Cornerstone's top 10 holdings, give me a second while I find it on the sheet, which are all great holdings. I have no problem with what they invest in, but I want to explain it a bit so there's an understanding of where that dividend comes from. Apple, Microsoft, Nvidia. Oh, no, sorry. That's the wrong ones. No, that was right. Um, so let me repeat them: Apple, Microsoft, Nvidia, Google, Amazon, Technologies Select Sector, Spider, um, Eli Lilly, Meta, Gabelli Dividend Closed End, which I'm not familiar with them, and JP Morgan. These are all, at least the 9 I'm aware of, very good companies and nothing that I have an issue with. But what they're doing is they're hoping that their portfolio is growing at a fast enough rate to be able to pay an 18% dividend. So it's no different than if I bought Nvidia and then I paid out a dividend and I might need to sell shares to be able to make that payment. And I hope that Nvidia goes up fast enough to justify the quote unquote dividend payment that I'm giving out. Now, maybe they're great investors and they're able to invest in companies and get an 18, 19% return and make those payments. But if you look at a 5 year chart, the reality is they haven't been able to do that. And that's why you've seen the share price drop over time because the value is the value. And currently, they're actually trading at a premium of the stocks that they own. The From what they showed, and this is of July 30th, the value of the companies and what they have invested in all of those stocks should only make the stock about $7.10 and it's trading at $7.60, which is a significant premium to buying the underlying companies. On top of that, you're making the bet and using these dividends in the hopes that it actually does perform well enough to be able to maintain that valuation. Maybe it does. Again, I like the companies that they had on there. I think they have some good picks, but it's really no different than you just buying those companies and hoping it goes up that percentage and selling off some of it to pay yourself the equivalent dividend as it goes up in value. And if it doesn't go up in value, well, that's the lowering of the share price. And then borrowing on margin against it because you think of those dividends as some sort of guarantee is a ton of risk that people may not realize they're taking on. This person who does those videos then uses that dividend and some of his other investment to buy the yield max funds, which if you watched my videos over time, and I'll get into those again while I talk about it now, I have a real distaste for them on so many levels. The main one being that they're selling things on a high yield return, implying that as you get into retirement, if you need a high return, this is a good way to generate income to your portfolio to be able to live in. What they don't explain is they're taking extremely high types of risk to give that return. And you see the prices of those stocks continuing to fall, at least the ones that I've watched, as they give those dividends because they're not really growing at the pace they'd need to be able to afford to pay those dividends. So I'll use Tesla, for example, because that's what I looked into. What they do is they buy Tesla synthetically using options. Instead of buying 100 shares of Tesla, what they would do now, Tesla closed at approximately $230 a share, and they do this on a weekly basis. So, what one would do to buy that stock synthetically is they would buy an at the money call, so a $230 call, and they would sell an at the money put, a $230 put, at the same time, which synthetically makes you long the company. What that means is both of those options cause you to buy 100 shares no matter which direction the stock goes. So if you sell a $230 put, if the stock goes lower, you get assigned 100 shares of Tesla at $230. On the flip side, when you've bought the $100 call, the $230 call, if Tesla goes higher, it gives you the right to exercise that call to buy 100 shares. That's why no matter which direction the stock goes, you own the stock. Now, why would somebody do that versus buying the 100 shares? Well, if you buy 100 shares, you have to put out $23,000. If you buy the call, and I didn't look, so please forgive me if you guys run over and check to see the pricing. Feel free to put it in the comments. If you buy the at the money call, maybe that call costs $4 for the week. Again, I've made it up. I don't know. When you sell the put, you're probably getting pretty close to that same $4, costing you a net price of zero. Now, the company that you clear through will require you to have a certain percentage of the put in cash based on their analysis of how far that company might move. So maybe you have to put up 25%, maybe it's 50%, but you don't have to put up 100% of the value, leaving you with some cash, which either you can invest that in something that's a safe investment like treasuries, or it allows you to put on the position even bigger. I'm not sure which Yield Max is doing. I do think they own some, treasuries or money market account type funds. So I think they're using some of the investment to put into something like that. But either way, the reason to do that is to be more levered and be able to buy more than if you spent the cash. What they then do is they sell an out of the money call against the portfolio to collect that quote unquote dividend. So maybe they sell a $240 call against that position they put on to collect some premium for selling the call that they can then distribute as a dividend each month or each week or however long they've decided that they're going to send out payments to clients. My problem with this is if Tesla now goes higher, you will make that extra $10, but you've limited your upside potential to only where you sell the call at. If the stock, on the other hand, goes lower, while you collect that payment from selling that option, you have all the risk to the downside because you haven't protected yourself there. Their comments are, the real way to keep up with the valuation is to continue to invest those dividends and reinvest in the company, and maybe you'd get some growth that way. My problem on that is your sales pitch was you get a high dividend to help you live on as you get to retirement, but the way to keep up is to reinvest those dividends. Well, if you needed those dividends to live on, but the only way to keep up is to put them in dividend reinvestment, or you're probably going to lose money, well, I don't really see the value there. I also don't think there's any understanding by many of the people buying these funds the type of risk that's taken on. So please, really do your research on some of these things. Know what you're investing in before you get attracted to yield, before you get attracted to just getting in. And I know I don't delve into the different stocks and their earnings and their growth and their sales, and we don't talk about the technicals. I don't see a ton of value getting into it because I find it's pretty boring to go over for most. Um, but really, when you're buying something, you need to know what you're getting into. And they're great options if you don't. I did that in last week's video if you want it. If I was technologically not terrible, I'd put a link right there, but I have no idea how to do it. I'm terrible at that stuff. I even wanted to do the Montgomery Burns clip and put it up there. In fact, I need to YouTube how to put that stuff in so I get better at it. But really, do your research, pay attention to what you're investing in, or watch last week's video where I talk about things that you can buy that really just buy the market. You have the SPYs, you have QQQ. That's buying the S&P 500 and it's buying the Nasdaq, and then they have others, but I've thought about putting my portfolio literally 100% into those two and not worrying about it. The thing is, I like to invest and I like to see if I do better. And if I don't, I don't, and I can make excuses for that. And if I do better, I can pat myself on the back and pretend that I am better at it than I really am. Because the reality is, as they say, time in the market is much more important than timing the market. It's very hard to outperform, but what I try to do is I try to buy great companies when they're out of favor, and we'll talk about some of those in a little bit as well. Oh my God, I talk so long, this my little clicky thing isn't even working. Okay, hold on. I'm gonna have to read my notes for the next part. Plus, that threw me off because I really didn't plan on talking about that first, but I really thought it was important for people to listen to because when I've watched some of the videos, I see a lot of people who really don't seem to know what they're talking about, and I see a lot of people who really do, which is why I continually say it. But pay attention to who you're listening to, really delve into it, watch some other people as well, and make sure what they're talking about makes sense, and there are others in alignment, and make those decisions by there. And by all means, I mean, I like this stuff. In the comments, feel free to ask me questions. There are plenty of stocks I don't pay attention to and I don't watch. And I really think if you just stick with what's the best, even if you overpay, it'll work out in time because the best tend to outperform over time. So don't get me the wrong way because even I get attracted to yield. I make some of the same mistakes. One of the things that this YouTube channel has done for me is thank you because it makes me a little bit more disciplined with what I do in my portfolios. By making the comments on the channel, it makes me feel a little bit more accountable. And I tend to buy the highs and sell the lows and make all the mistakes that everybody else does. And I've been fortunate enough by learning through this over the years that my main account, which I've told you guys a bunch of times, I have it a place that I can't even trade it online. I don't have access to it. It doesn't have online capabilities. I have to make a phone call. And the reality is, I think of it as a safe deposit box, and I primarily just leave everything. And my recent trades, which I try not to do, have been mistakes. I sold a couple of calls on some meta that I own, and I got taken on the position, and I really regret it because I think they're so undervalued here, and I hate that I gave up some of the stock. But when the market looked like it was correcting, like others, I got nervous too. At the same time, it freed up some cash that I wanted to have on the sidelines in case we want to use it because we're talking about maybe doing a full year in Japan. And on that level, if any of you know where you can buy Thai baht, Vietnamese dong, Malaysian ringgit, or what's the other one I wanted to buy? The Filipino peso. I want to be able to buy them like legitimately at spot. Now, my background, I used to trade at the Chicago Mercantile Exchange. I think the US dollar really has run its course and it's beginning to reverse. And I wanted to put on those positions, but I don't have an outlet where I'm able to actually put them on. I can put on the Japanese yen because I still have my relationship at the exchange. So I'm able to buy or sell yen at spot. I don't want to get into them if I have to give up all the what the bank charges because the conversion rate that they use is just absolutely ridiculous. I'm not looking to give up 4% or 5% on each side trying to get into it because it's not that important to me. It is important enough to do it in some yen because if we spend some time over there. But those of you who watch currencies, I really do think the dollar has run its course. I've been wrong for a long time, but I do think it's finally reversing. And I think we'll see that continue because both people who are running have plans to spend more. And I think as we spend more, we're going to cause inflation, but not in the way that we've seen it, more internationally than anything else. What I mean by that is our dollar gets weaker. That doesn't mean if you go to the store, things continue to go up in price necessarily. It does mean if you try to buy foreign products, they're probably going to cost more simply because our dollar is getting weaker. So whatever we're buying from Japan or Europe or China or whatever country, if the dollar continues to lose strength, their products will go up in value. Again, doesn't mean that as you go to the grocery store and you buy some eggs that that'll necessarily go up because we live in dollars and the price will be the price and you'll see it move how it normally fluctuates. I also think that the ones that have the least amount of value, or however you want to think about it, that have been so extreme and have had such huge inflation over the years, like for example, the Vietnamese dong or the Malaysian ringgit, well, not the ringgit quite as much, but the Thai baht, I think the ones that have gotten really extreme are going to have the best move. Just my opinion. Again, you need to do your own research. But I think that because they're getting caught up technologically. So it's hard for me to picture them having the type of inflation they would need to make things make sense. Now, I love YouTube. I watch all sorts of videos. I fantasize about moving to some of these places, and I'll use Malaysia as an example. There's a woman I was recently watching that's been showing some properties. She's from the UK originally. She's moved out to Malaysia. And I really like the stuff that she shows because it's like fits in with what I would be looking at. And she found this property in Malacca that she was showing that in US dollars is selling for around 300, maybe 325,000. Now it doesn't come with all the fixtures and everything, but it's 3,800 square feet. It's newly been built and it's got all the really nice touches and fixtures and everything with it. Now, it doesn't include everything, so maybe you're talking it gets to $400,000 in the US. It's a lot of money. But that home in most states would probably be $1 million or more. And I'm floored by this because I don't see it as being the middle of nowhere where you're stuck and the world is great. So they're catching up in technology. They're looking more and more like the US. The countries are beginning to grow, yet the price of the home is like a third or less of what it would cost in the US. To me, that doesn't make sense, and I think that's going to change. And I don't think they're just going to increase in value fourfold to the people who live there because that's extremely expensive to them. The price makes sense in terms of how you would value the home. What I do think is going to change is the currency valuation. So if you're buying it today in American dollars and it costs 1.5 million ringgit, which is, $340,000 approximately. I didn't look it up. It really is a guess. That it's not going to go up to 4 million ringgit. It'll drift up the way that real estate does, but the dollar against the ringgit is going to change to where that house makes more sense as to what I would think it would cost when I look at the structure, the location, and what you get with it. I don't think it'll be dollar per dollar exactly what I'm envisioning here, but I do see the total value, whether that's through the currency fluctuation or the price of the home, being closer to 700, maybe even $750,000 compared to the one here, and still being a good deal, but not to me what looks like an absolute steal. Same thing if I were to compare Bangkok to New York. Bangkok is not inexpensive, but it's still a real city, and they're growing at a great rate quicker than I feel like we are. So as that continues and the disparity between the countries becomes less and less, along with adding remote work, why wouldn't things just be more in line with each other than where they are, where one is just so much more expensive than the other? Now, I still think there'll be differences because there'll be valuations of, freedoms or lack of that, or where you want to live, what you enjoy, the safety. Like, I think some of these countries, we don't realize how safe they are. But whatever it is that comes into those valuations, location is still location, and one will be worth more than the other. I'm not making the prediction on which, but I do think there will be a general coming more similar in value for the structure that you get and all those other things that come with it than simply one being more than the other just because people make less or whatever goes on in that specific region. So I want to talk a little about real estate as well, and I'll get back to the stock market and some of that stuff a little bit later on. But I saw a great real estate video. I watch him every week. Jerry Abbott. I can't think of the name of his channel, but I like Jerry a lot. We tend to have a different opinion on where we think real estate is going, but I like his analysis. I find him interesting. I like the channel. I think in some ways they, might be good to change it up a little instead of just showing the overpriced home on Zillow and that dropped their price or whatever they need to do. I could show them one that bought it for 940,000 less than 2 months ago and relisted for 1.6 million, and I kind of laugh because they've done nothing to the home. But he talks about the crash that's coming. Now, you guys know that I kind of disagree on that, but please understand that real estate is really localized. And there are places that I see opportunity and maybe even more opportunity coming because of specific things going on there. The Fed just hinting that they're going to start cutting interest rates have already made mortgage rates improve a significant amount. The market has not gotten busier from what I see. Um, I have a good perspective. I work at a loan company and I get to see what all the loan officers are doing because I'm director of loan production. And it's a very small company it's a friend of mine's, but it does give me some perspective on it if I feel like things are getting busier or not busier. And while rates have come down, people seem to still be waiting, thinking they're going to see something that, some big correction, giving them some great opportunity that I just don't really see. And I don't see it in Las Vegas for Las Vegas reasons. We don't have a lot of inventory coming to the market, and those who own the properties aren't looking to get out. We're, we're landlocked, and the BLM, which is the government entity out here, owns a lot of the property that they're not looking to release, from what I understand. And unless they release more property, we don't have a whole lot of area to continue to build on, giving us limited ability to grow and allow the new builders to just keep putting up new homes. You add that to a lack of people listing their homes because they have very low interest rates already. I just don't see what's going to bring a lot of inventory to our market. We have no state income tax. We recently added the Sphere. We had F1 racing that we're probably going to continue to do. We've added a football team. We've added a hockey team. We allowed professional sports to come into our city. We're now talking about maybe a professional baseball team, as well as something that got approved for a Hollywood studios that may or may not happen. So the city's really growing, and it's growing outside of an area that was just a strip with casinos, and it's not just a gambling town, and we're continuing to get other things. In the video, people were making comment about how miserable Vegas is because of the weather. It gets so terribly hot. Oh my God. If I could tell you, like, yes, July and August are extremely hot. And I grew up in New York and I was that kid. I would walk around in the winter in like shorts and a t shirt because I loved the cold. If I were to tell you that the summers in Vegas are so much better than what they were in New York, I understand on paper it doesn't make sense, but I would so take 110 degrees with no humidity than 85 and 98% humidity. I hated walking out in New York and just all of a sudden your shirt is wet, you feel gross, like it's miserable. You never really feel that way in Vegas, even when it's hot. It's more like being in a sauna. And as you get here and your blood thins out over years, you get more and more used to it. I love the weather out here. Now, I don't mean to oversell it, but I moved here in 2005 because I thought things were undervalued. I saw it as a really good place that had a lot to do and you could find really inexpensive properties. And I just didn't see that staying that way forever. I did not expect it to do what it did. I don't mean it as this, oh, blah, blah, blah. But I do think it does make sense that it's overvalued. Now, if we flip to Florida, where I see a lot of the same things, I think it's great to be by the ocean like that. I think it's the only place that you can be in the continental states and it feels like the Caribbean. Like Florida's really great. But they had that condo that collapsed years ago. It's created all sorts of new regulations in terms of how the condos have to have their budget set up, the amount of reserves, and everything else, and it's caused them to have these huge special assessments that are really impacting the condo market. They also had a ton of problems with insurance, whether it was insurance fraud or the weather being rough, and had too many claims and causing the insurance companies to take losses. And their insurance have gone up in some cases, I've heard, triple what it used to be, really throwing people off. They have had a huge increase of inventory. And if you watch Jerry's video, he shows a graph of the United States and you can see the different places and how much inventory they've had. I think Las Vegas was minus 2% year over year. And if I remember correctly, Florida was a 62% increase. Please, this is off of memory. It may be wrong, but feel free to go to his video and take a look. Like I said, I like his information. We just see things differently. He sees a collapse coming and has for a while. I just don't. But it's okay. I still like his information. Anyway, with the increase of inventory in Florida, slowly, if not quickly, that's going to push the prices lower, at least in my opinion, which I think creates some good opportunity in a place that's really a great place if you're in the position to own some property. I would be really smart about it. I would do your math and factor exactly what you would need to make in a property. And I would assume that the rent estimates might be a little higher than what you would really get because as they change new hands, there might be more rentals that come to the market and so on and so on, which is why I do all sorts of analysis when I look at this stuff. And when I look for a property, like I'm very removed. It's not typically about finding a property I love. I'm really looking at the math and it has to hit this criteria. And if it does, then I'm interested. And if it doesn't, it doesn't. And right now, it hasn't quite gotten to where it hits my criteria. But I do think it's possible that they're going to have enough inventory that they're going to push some distress sales that'll create opportunity where the math makes sense. Maybe your area is like that too. I could see Texas potentially becoming like that, but I don't really see that happening in Las Vegas. Maybe I'm wrong. I'm wrong about a lot of things, but that's the bet that I'm making, and I'm going to continue to stick with the stuff that I have out here. even though at this stage of my life I really don't enjoy having rentals because tenants make it a pain. Oh my God, before I get into it, at least in my opinion, Google went on such a sale. That nervousness about the Department of Justice. I mean, I got to tell you, I kind of I go back and forth as to whether I even hope they break them up. They have so many great companies in their shell in their overall company that I do want to own a bunch of them. And if they're forced to split up, all of a sudden these are separate companies that have ability to grow independently. I got no problem owning it as Google. I got no problem owning YouTube. I don't mind owning their rideshare or their like they have some great companies in there that I got no issue owning it however they want. And it dropping to the valuation it fell to, getting below $150 a share, I saw that as such a great opportunity. Like anything, it could go lower, but at least right now, that's the one I like the best. Great company with bad news. I still like Boeing, and in fact, that they went on strike. I'm half waiting for that to get towards the tail end, where it looks like they get past it, because my guess is once that agreement is made, that's probably the end of the bad news for them, and it'll allow the stock to have less selling pressure on it. My son and I started listening to Rich Dad Poor Dad on the audio, actually on YouTube. And look, he's only 13 years old, and I'm already pushing this stuff onto him. And I don't even like a lot of things that the guy that Rich Dad is says, and I don't have a lot of the same beliefs as him, but there's a lot of really great nuggets in this book that talks about the things that school doesn't teach. They teach you to learn a certain profession and study and work hard, but they don't teach you financial literacy. And it's so important to really understand financial literacy because one thing that he gets into is the people who have salaries and rely on those salaries can oftentimes get more and more into debt because they don't understand their money and how it works. And if their primary home is their biggest investment, that could be a huge mistake, especially because, similar to him, I see your primary residence as a liability, not an asset. While it might go up in value, it costs you money. And maybe later on in your life, it has more value than what you paid for it. But at least me, we pay a mortgage, we pay maintenance, we pay air conditioning bills. When something breaks, we just had to get a new refrigerator that was quite expensive. We have help with the pool. We had like homes cost money. If you buy a property as an investment property and it cash flows, well, I would see that as an asset. Takes a little bit of work, but stocks are assets, investments and collectibles and things that go up in value are assets. And his talk about school not really preparing you and teaching you these things, and what he was saying, and it makes a lot of sense. As your salary goes, your grows, not goes. As your salary grows and you move up the chain, a lot of people's liabilities actually grow and not their assets. They buy fancier cars, they buy bigger houses, they buy a boat, whatever it is that's draining their wallets because they're getting a bigger paycheck and get in this position where they assume they can afford these things instead of focusing on making their money work like employees until that's generating some sort of income to help pay for whatever it is that they want. It's a real issue that I see, and it's why I do these videos. Is I hope overall people save and learn how to use their little worker bees called dollars. And if you listen to or read Rich Dad Poor Dad or Poor Dad Rich Dad, I might be getting it backwards, it gives a lot of insight of where they miss on those things. And it's a really good book in some ways, no matter what you think about what he talks about on the YouTube videos or his position on real estate or anything else. It's this recognition of you have to be financially literate to understand where the values are. Because as you work, what did he say? You work from January to May just to pay your taxes to the government. Even Social Security, you're paying the taxes on that. It's amazing how much money is going to pay taxes out of your paycheck. And then if you're adding on new, monthly payments, a lot of people with some high incomes can actually end up putting themselves in debt instead of being in a really good position. And I want to make sure that I've taught my son about this stuff so that whether he goes down the path of having a job or trying to start his own business or whatever it is, that he understands the value of the dollar in terms of using it to put away, to get dividends, get growth, get whatever it is, so that the job becomes a secondary thing that you can choose whether you need it or not. Now, that takes a long time and doesn't happen overnight, but I would dedicate as much as you could towards saving and putting away to get there as fast as possible. I even told him, uh, like, live with us as long as you need to when you get to 18, 19, 20, or out of college and you have a job, so that it puts you in the position to be able to save as much and have your little worker bees making additional income so that you can have that security as well. I really believe this stuff. Now, you have to do your own research and decide what's best for you. Can't just listen to me, like I say. But I hope everybody saves and puts themselves in a good position so they can take a breath and relax if there's some rockiness going on at their work or whatever it is, to make the decisions to do what they want to do with their life. To me, having that ability to decide is such a value versus feeling like I have to go to my job because I need that paycheck and I need to walk on eggshells because I really don't like what I'm doing, but I can't afford to lose that job, is just a terrible position to be in. And the fact that people at work get excited for the weekend because they don't want to be there is such a terrible thing. I like the week because the markets are open and I enjoy this stuff. So it gives me what to do. And even if my work gets busier, I like interacting and chatting and everything else. So I enjoy the week. The weekends, now I have my family, so I don't want to say when there's nothing to do, I hang out with them and I love my family time. But I think if we did nothing all the time, it would get super boring. And I want to have something that I get excited for. And I'm going to mention two stocks that I want to own, myself included, that I don't. And then I probably should because I always say valuation shouldn't matter, as well as three stocks I think are on sale. One I already mentioned, which is Google. The other two, I think Ulta Beauty and Lululemon seem really reasonably priced. I think that if you hold them out for a while, eventually they'll turn around, their earnings will make sense, they'll continue to grow, and I see really good price valuation for them. And then the two that I wish I owned that I really don't. I mean, I have tiny, like jokes of position just so that they're on my screen. And I never seem to pick them up because they never get to where I think their price is reasonable, is both Costco and Tesla. And myself included, I think I should ignore that and probably just buy some because I think owning the best companies is really what's important, because if you give it 10 years, you've probably done pretty well. And I'm going to give you a real quick glimpse into what I have in terms of my safe deposit type stuff. Um, I'll ramble through them real quick, which is in order of biggest to smallest. Meta, Amazon, Chevron, Starbucks, Google, Intuitive Surgical, Boeing, Pfizer, Microsoft, NextEra Energy, not the NextEra Energy Partners that I've talked about, which I have in a different account, but I have NextEra Energy as well, which is a little bit to me more secure of a company. Cisco, Palo Alto Networks, Caterpillar, UPS, which is a relatively new position since they've had trouble with their employees and everything else that drove the stock lower. I see them currently with paying a 5% dividend, which I think they're valued pretty fairly now. Apple, Disney, Dow, Bristol Myers, also a new position. So is Pfizer, actually. Um, Target, which I recently put on, and then very small positions, very small. And Match.com, Shopify, Loan Depot, Penn National Gaming, and a tiny bit of Coinbase. Coinbase, I think, of getting rid of it seems kind of silly to me, um, because I do have some. Bitcoin thrown away on a thumb drive or whatever the hell they are that locked away that my kid knows and my wife knows where it is, but that I don't really plan to do anything with. But I think those are great companies. The interesting thing is the top five, because I did this analysis today, which is Meta, Amazon, Chevron, Starbucks, and Google, are 44% of the portfolio. And that includes that 12% I have in cash that I'm ready to deploy and not sure what to put it into. So very top heavy in terms of what I own. And that's kind of what I mean about I think they're great companies. Maybe I could tweak it a bit and have a little more Microsoft or something else that I think is just a great company. But I'm not super concerned and I don't really pay much attention because this is what I want to own. By all means, make comments in the comment section. Tell me which ones I haven't included. I know some of you guys love Visa. Um, I don't know what I think. It's probably a decent company. And some of the others I've heard about. I actually hear somebody talk about Texas Roadhouse, and I like his channel a lot. It's probably a good one too, but I'm not looking to expand. If I were to make decisions, I'd actually contract and try to narrow it down to just my top 10 and leave it at that and put 10% in each or whatever the numbers is and just set it and forget it, but have what I think are the best companies around. Kind of why I say, like I'd put Costco and Tesla in there. My difficulty is like when I look at price to earnings ratios and where they really need to nail it on all levels, on every aspect to make those valuations and grow. And maybe they do. I mean, it's legitimate that they could do it. I even heard a podcast from one of those all in podcast guys who was the Uber guy. Listening to him, I am amazed. I missed the boat on this one. Uh, they have things going on. I had no idea. They're actually probably going to compete with their own customers. They know based on the Uber Eats deliveries what you order, where you order it from, what sells the most, and they're opening up these robotic kitchens in the areas that order the most. Like if they know this area orders Chinese food, they can open up a Chinese restaurant right there. And based on all of the data that they can really target exactly what's demanded in every single location. And they're either renting it out or leasing it out to chefs to run, or they're just going to have these new robotic things that do it all for them. And then they've worked a deal with Google or Alphabet, and this is why I like one of their technologies in terms of the driverless taxis to be able to start moving their food. It's so smart. These companies, like it's so hard to know what's really going on, but what I was listening to in that podcast was super cool and super innovative. Anyway, before I forget, because I haven't said it once, do me a favor if you haven't already and hit that subscribe button, hit the like button, make some comments. I can't tell you how much it would help the channel. In all honesty, I do this for me more than anything else. So if you don't, you don't. But I would appreciate it because it'd be kind of cool to watch it continue to grow. I've been really amazed at what it's done already, and I want to thank everybody who subscribed. Those of you who really listen all the way through, it's so cool. Um, I love seeing the comments in the comment sections. If I ever miss it, it's really because I watch on my phone or I use my phone. And they don't always give every single comment, but I try to do my best. Have a great day. Have a great week. I'll try to post some shorts or something during the week and not just be totally not around. But know that I'm always around in the comment section. I'm always watching other videos too. Have a great day.